Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a bit of a status quo in terms of that conflict. Sixth day now between Israel and Iran, and no end in sight, no off-ramp in sight. I think the big takeaway, of course, is the jump in oil that we've seen, about 5% overnight. Of course, we'll track all of that and more. I'm Prashant, with me, my colleagues Nigel and Mangalam. Guys, hi, morning.
Good morning, Prashant. We're none the wiser from yesterday. Yeah. In fact, we were hoping for some sort of truce to take place or some sort of deal to come by. We saw the US CBOE VIX decline as well yesterday at start. But now this morning, we're back to square one. 13% higher on the CBOE VIX, and we still don't know where things will be.
Well, that's right. And, later tonight, we'll hear in from the Fed chair as well. So that'll be the other big cue that we'll be tracking. And things have got even more uncertain, on the global front. So it'll be interesting to see how the Fed chair is viewing it.
Absolutely, and I think the decision, the press conference and all of that will be in focus as we come back tomorrow. Let me just quickly run you through a bunch of things as we begin this day. And I'll just start with the price action, right? I mean, so you have oil, which was up 5% last night and near 77, by the way, so 76.5, 77. So basically bouncing around there. S&P was down about 0.84%, and you have the dollar index, which surged to almost 99. It's about 0.8, 0.85% higher. So the news was largely with regards to the Israel-Iran conflict, and it kind of sort of intensified further. Bloomberg said that US is deploying more military assets to the region. Remember, they've got 2 large aircraft carriers and, of course, a bunch of refueling aircrafts, etc. as well already there. So they're deploying more. President Trump met with his national security team. Immediate exact plans in terms of what the course of action was not very known, was not telegraphed one way or the other. Although President Trump did demand on Truth Social for Iran's unconditional surrender. So a bunch of these posts, right? He also warned of a possible strike against Iran's supreme leader, Ayatollah Khamenei, but said that we're not going to take him out, at least for now. So those are some posts which were put out, at this stage in terms of communication being conducted on social media. Many things were unprecedented, as unprecedented times. This is one of them. But I think that's where we are at now. Later tonight, as we were discussing, FOMC and of course Powell's press conference in terms of how he views. I don't think there's going to be very much clarity there as well. No move is expected. But the point is, do they have a clear idea? U.S. economy is still strong, but it's expected to slow down in the second half because of tariffs, etc. And the tariff rate, of course, is still a moving thing. Effective tariff rates, if you ask U.S. economists, around 13% compared to 3% when Trump took office. But that 13% is not static. That number perhaps will change. So in that sense, how much will we learn is the question. But I think will be important as we come back tomorrow. You also had a bunch of macro data last night, retail sales, etc., which were slightly on the weakish side. I'll just tie in the levels here. So the Nifty yesterday failed to break and sustain above the 66% retracement level. And we closed almost exactly at the 20-day moving average, which is 24,841. 853 is where we left off at. So that's a bit of a pivot level. But, 20-day, we're looking at very near term. So I think better to look at some, recent highs and lows. So the recent high, the resistance comes in at the recent high, 24,982. Which is the recent high, becomes a natural kind of resistance. That's yesterday's high. And of course, support comes in at 24,473. It's nothing but the lower bound of the range that we've been in. So keep an eye out on that. The Nifty Bank failed to cross the 40-hourly exponential moving average on a closing basis. Here the resistance comes in at about 56,067, and the support level comes in at 54,200 on the downside. So it's a slightly broader range. But that's where we are at. GIFT Nifty will give you a quick sense of how we're likely to start before we go any further. Again, something like what we saw yesterday, neither here nor there, about 40 points down. Mangalam.
Yep, absolutely. Take that point. Yesterday as well, at the same time, the gift nifty was indicating a 37-point downtick. No change out there. Wall Street, like you pointed out, saw a bit of a decline in overnight session. The Nasdaq, which we thought should outperform after the outperformance that we saw in the previous trading session, actually was the underperformer. And the Asian pairs as well. If you look at the Asian markets, they've opened fairly mixed, slightly on the lower end as well. Specifically for Hang Seng, which is down about 1.3%. And the CBOE volatility index, which was down 8% in yesterday's trading session, actually spiked about 13% as the uncertainty continued as well. The street expects no rate change from the US FOMC outcome. The commentary will be extremely crucial to track. And, you did speak about the May retail sales that was below expectations. But Japan May exports as well fell by about 1.7%, which is the sharpest decline that we've seen in the last 8 months. So across the globe, there is some slowdown that we are seeing, and this at a time when crude has spiked to around $76. The Indian indices saw a decline. Yesterday, they opened with more stocks advancing than the number of stocks that were declining, and that reversed sometime in the middle of the trade, and thereafter we ended with way more stocks declining than the number of stocks which were advancing. The only outperformer was the IT index. Let's see whether that holds on in today's trading session or not. Both the FIs and the DIs bought in the cash market, but a large part of that was because of the large trades that took place. We were speaking about Vishal Megamart, Zydus Wellness, where TPG Capital sold as well. So, we'll have to watch out for the institutional flows too, the pivot levels. We have the 20-day moving average, both the Nifty as well as the Nifty Bank. Nifty Bank slightly below the 20-day moving average, the Nifty slightly above that. So where do we go from here will be extremely crucial. And the one stock I'll be tracking today would be BSE. Why is that? Because we've been pointing out, right? Yash had broken that story that the NSE has given, the approval, or the SEBI has given the approval to NSE for Tuesday weekly options expiry. But if you look at the BSE stock, it's fallen from over 3,000 to around 2,600. How much of that is priced in and how the reaction will be today would be extremely crucial to track from a stock-specific standpoint. But Nigel, over to you.
Well, the markets continue to remain in a bit of a range, but the cues that you're getting overnight is suggesting a bit of a risk-off, though I think that band will continue to remain because you have Brent crude prices that have spiked up. The 10-year yield on the US bonds, well, they are holding at around that 4.4% or thereabouts, and the dollar index has strengthened overnight. That's typically a bit of a risk-off that will play out. So a range is what I'll be working with. What happened in terms of the FI as well as the client action on index futures? Well, both of them added some long positions, and there was some mild short covering that we saw from both those two participants. How are the FIs positioned? Well, 21% of their positions on the long side, 79% of their positions on the short side. So they're pretty much still very much, net short with close to 100 lakh contracts on the short side. So in case you get a positive trigger, then these guys will be running for cover on the short side. So we'll keep an eye out on that front. But for the time being, we're searching for that positive trigger. Another, positive that I'm looking at from the options data is the kind of writing we have seen on the put side. And that's giving you a sense that at least in the near term, the bulls believe they can protect those recent lows, 24,500 or thereabouts, which brings us to the options data. The call writers are getting very, very confident. The bears believe that they've got this covered on the upside. They don't believe that 25,100 level will get breached. And just take a look at the writing you've seen. Between these two strikes, it was close to around 70 lakh shares that were added. Moving to the levels that we're working with, for today, well, the resistance comes in at around the 25,000 mark or thereabouts. The reference point that we ended closer to yesterday was around the 20 DMA. You don't want this level to get breached decisively on the downside. But otherwise, this broad band that I've been talking about for the last 1 month or so, we expect to continue in that range. I'm focusing on the two indices as well, which constitute a large part of the market. The IT index. In the last few trading sessions, it's done very, very well. It's up close to around 5.5%, and that's encouraging because you have been seeing some kind of buying out there, though it's been a relative outperformer for the year so far. Overnight, the Nasdaq was a little under the weather, so let's see whether or not that gives some part of it back. So I'll keep an eye out on that. And the Nifty Bank, if we need to see a fight back today, I think the Nifty Bank needs to participate. There are signs that there are some buying at lower levels, and I think the recent low at around 55,100 is the important mark you're looking at on the downside. That is when very, very close to the 20 DMA. So you don't want the Nifty and the Nifty Bank, both of them, to break the 20 DMA decisively. Stocks that I'm looking at, well, the Vedanta Group stocks are going to be in focus. Vedanta, for the last few days, going by the global turmoil, it's been quite solid. In fact, it's up close to around 2.5%. It's been a relative outperformer just in the last 1 week or so. There's a crude play out there, valuation supportive, as well as now you have a large trade that's taken place. So Vedanta should be in the positive terrain and see a bit of an outperformance continue out there. But Hindustan Zinc will be interesting because you have a massive open interest build up. The street was sensing there's going to be some kind of supply. maybe they were working with an OFS route. Now, if that large trade that takes place, that's a block takes place in pre-open, well, I'll keep an eye on this stock. The shorts may have to run for cover. Massive open interest built up, not just yesterday, but over the last few days. So both these two on my radar, guys.
All right, no, absolutely. Last night you also had these US solar stocks which sold off very hard. I mean, between 20 and almost 40% in some cases. And that is on the back of, Senate Republicans moving a bill which ends clean tax credits for solar companies. So First Solar, which is one of the largest players, was down some 30%. Typically this is not new, but the point is when we've had those kind of reactions in the US, here in India as well, some of these recently listed stocks have taken a bit of a knock. So keep an eye. We'll talk more about this with our guests. But let's just address the headline news. Marco Papik is Chief Strategist at BCA Research. He's with us. Marco, great to have you with us here. Thanks very much for your time. I was just thinking when this Russia-Ukraine thing started, and who thought, right? I mean, there was a flurry of negotiations early on that, well, we're going to sort of end this and that in 3 years now. With regards to Iran-Israel, I mean, surely these wars without an end. What's your sense, Marco? How do you look at the entire thing? And do you think it'll escalate from here or de-escalate?
I think you always have to escalate first to de-escalate. So I think there's probably more escalation coming. But the big difference is that it's highly unlikely anyone's going to invade Iran. And you can't really force regime change with an F-16. That would be highly unusual. It's really only happened once in recent history. So because of that, I think that there's a natural limit to how far this conflict can go. No party of this conflict wants to put ground forces really anywhere. Whereas in Russia-Ukraine situation, you did have one party that definitely wanted to put troops on somebody else's territory.
So escalate to de-escalate, which means from a financial market standpoint, what? I mean, so far things have been pretty contained, although oil jumped once again last night.
Yes, I think in the near term, I can definitely see oil prices going to 85, maybe even 90. But here's the fact. It doesn't really matter what Israel does. It doesn't matter what the US does. For investors, the only country that we should be focused on is Iran. Because it's very simple. Iran is either going to try to take oil barrels off the global market by interjecting the flow of oil through the Straits of Hormuz. It's either going to try to intervene in the shipment and the production of energy, or it's not. And if it does start to impact the flow of oil out of the Straits of Hormuz and out of the Middle East to the rest of the world, it's going to invite a pretty significant retaliation by the US against it. A retaliation that will really make Israel's attack look like a bee sting compared to a grizzly attack. So this is not something that Iran will choose to do lightly. And remember, in the 46-year history of the Islamic Republic of Iran, it's never tried to stop the flow of oil through the Straits of Hormuz. And there's a reason for that, because that really is the nuclear option, after which the retaliation by the US is going to be pretty swift and pretty dramatic.
So assuming that we, just edge towards that and not actually do it, do you think this elevated tension is an opportunity for one to increase their allocation to equity? What would one's, asset allocation strategy in a situation like this be?
Well, you're reading my mind. That's exactly what I'm thinking. There's nothing bearish about what's going on right now. Oil prices can go to $150, let's just say. If oil prices go to $150, S&P 500 will fall. You have to close your eyes and buy on that. And there's really two reasons for this. Number one, the US will decimate Iranian capabilities at that point. But also, it means that the ability of Iran to stop the flow of crude through the Straits of Hormuz is temporary. There's going to be a temporary moment where crude stops flowing. I think between 2 and 4 weeks is the maximum that Iran can do at the best of time, maybe even less, given their inability to defend their airspace even after against Israel, let alone the US. So yes, this is not a reason to be bearish equities. Now, I hear some clients say, yes, but this could significantly impact inflation and therefore central bank monetary policy calculus. And I just think to myself, what central bank governor or president is going to hike interest rates because of a conflict in the Middle East that is temporary in nature. I just don't see anybody doing that. That would be, political suicide. So I don't see that happening either. It's very difficult to get cyclically bearish equities because of this moment.
All right. Hi, Marco. Good morning and good to see you in. Nigel on this side. Marco, the hope here in the Indian markets is we do not see anything above $100 per barrel. That said, the other factor that we track globally is the dollar index. And I recall when the dollar index was rock solid, you had called out that you said maybe in the second quarter of this calendar year, the dollar index could peak out. And that seems to be the case. Even in these uncertain times, you're not seeing a flight to safety, which is the dollar index. How do you see this one move from here on? It's holding at around the 99 odd mark.
When something happens in the markets that should create a very clear outcome, and that outcome doesn't happen, you have to understand that something is fundamentally shifting. I remember when Mosul fell to the Islamic State back in 2014. I believe it was May 2014. Clearly a bullish event for oil, and oil just had a little blip. That was the moment when I realized that, wow, oil prices are going to collapse, and they eventually did over the course of 2014. Similarly, this time around, you have Israel and Iran exchanging ballistic missile fire. If there was ever a safe haven flow that should have buoyed American assets, this is it. And yet you get a little blip in the US dollar. That tells you that we're in a structural secular shift. I expect another 20% decline in the US dollar against major currencies over the next 3 years. And so we're at the beginning innings of that move.
All right. And what about positioning in terms of equity markets then? From an emerging market standpoint, a weaker dollar normally means that flows, tend to move towards emerging markets. What is your reading of it?
Yeah, sorry to interrupt. Of course, it depends, right? Sometimes it can, sometimes it doesn't. The big question is the flows. Is the dollar falling for the right reason? And in my view, so far, it's not an uncontrolled collapse in the US dollar. It is flow, and those flows will go to Europe, to emerging markets, to Japan. And I got to tell you, the big resistance for most of my clients in the West in investing in emerging markets is kind of lack of imagination. What productivity gains are happening in emerging markets? What businesses are starting? What entrepreneurs are starting businesses? It doesn't matter. Look, when the flows move into an economy, what happens? Currency appreciates. What happens when a currency appreciates? The central bank gets to cut interest rates. What happens when you cut interest rates? Entrepreneurs, businesses, technology starts, loans get borrowed. You start thinking about starting a business. You start thinking about entrepreneurship. And that's why it's such a big deal for the emerging markets, including India, that US dollar could be weakening on a secular basis.
Right, 20%, right, from here. And we've been making that point since Monday, the fact that U.S. treasuries, no demand for bonds, no demand for dollar, even though this conflict is sort of erupted. And that's quite telling. Sometimes, as you said, what doesn't happen is more important than what does happen. I just want to quickly get your reaction to this bit of news, which I'm going to put out on the screen now. So these are U.S. media reports, Marco. Pakistan Army Chief Asim Munir is to call on U.S. President Donald Trump later tonight. Trump is going to have lunch with the Pakistani Army Chief in Cabinet Room in the White House. I mean, I don't know what to make of it. I mean, this is, it's absolutely crazy if you think about it, especially after what has happened with those attacks in Kashmir. And Trump, of course, over the last many weeks, actually has, I think, 5 or 6 times said, well, he was in the middle of the negotiations and he kind of sort of, used trade as a tool to ask both sides to pull back. But what do you make of it, if anything, Marco? I mean, geopolitics is a big part of it now.
You have to understand, President Trump's got that sort of realpolitik view of the world. So there's no real allies, there's no real enemies, there's just interests. And so that's the first thing I would tell the Indian audience, that it shouldn't sort of hang its hat on some alliance with the US. Yes, the two countries are allied against China on some sort of level, but this is a different United States. It's far more Machiavellian than it is magnanimous. So that's the first point I would say. The second point is I wouldn't read too much into it. And it's a very strange meeting. A president of a country usually doesn't meet a counterpart, anyone other than the counterpart, another president. That's the protocol. So this may actually be related to what's going on between Iran and Israel. And Pakistani military, which has, for all its faults, it has pretty deep links with the US military establishment, given the operations in Afghanistan. They could be an interlocutor between Iran and the US. So that's a different angle to take this. It may not really be concerning India-US relationship or India-Pakistan relationship.
Now, points taken. Pakistan does, of course, share a border with Iran. And there were some reports yesterday that they've closed the border with Iran, but unconfirmed reports. On that point about the president of the US meeting the Pakistani army chief, I guess that's quite telling too, right? In terms of who runs that country, it is the army. But yeah, points taken. Marco, thank you very much for joining us. More later. Appreciate your time here on CNBC-TV18. So that is the view coming in as far as geopolitics is concerned. Let me just quickly run you through the interactions which are lined up here over the next 2.5 hours. So 8:35, Galaxy Surfactants. There is a Motilal note, pretty aggressive targets put out by the management over the next 3-5 years. So we'll discuss that with K. Natarajan of the company. 9 o'clock, you'll have Hindustan Zinc, which has announced a 12,000 crore capex to set up a 250 kiloton zinc metal complex in Rajasthan. 9:20, Mihir Vora on markets. 9:30, PNB talks to us about margins given the rate, the fall in interest rates that we've seen. Pavitra Shankar of Brigade will be speaking with us about real estate. We had Prestige yesterday. 9:50, Arnab Banerjee of Seat speaks with us. It may be temporary, but oil prices are up $15 pretty quickly. And towards the end of the show, it's the economy, Lata in conversation with Santanu Chakrabarti of BNP Paribas on how the massive CRR cut will impact Indian banks' profits.
Time to slip into a snappy break. We've got a lot of stock-specific action to track for you on the other side. For the time being, I give you a sneak peek. Vedanta, Bharat Forge, Polycab, GMR Airports, Railtel Corp, all of them will be reacting to positive news flow. Add to the list, Ugro Capital and ONGC. On the flip side, you have Hindustan Zinc, OMCs and Asian Paints that will be reacting to negative news flow. Take that break, come back, we'll get into further detail on all of these names.
40-point downtick is what the GIFT Nifty is indicating. The uncertainty over Iran and Israel continue, but a lot of individual stocks, all of them on our radar this morning. Let's get to CNBC TV18's list of top stocks for the day. Our entire research team is up for you on the screen. Let's start with Nigel. Nigel, Vedanta and Hinzing.
Mangalam, over the last 1 week or so, I've been making this point at 500 rupees plus, both on and off air, that someone will be tempted to come and sell Hindustan Zinc.
Yep.
And, the writing's on the wall normally, because I've seen this in the past as well. And that's precisely what's happened. Now, Vedanta is looking to sell a small portion in Hindustan Zinc. As of the last recorded number, that's the last reported number in March, they held close to around 63.4% stake. Now, the block has been launched, and in fact, the base price is at a discount of close to around 7% in comparison to yesterday's close. If we're looking at a quantum, close to around 3,000 crores at the base price. So they'll get a little bit higher than that in all probability. The total quantum they're looking to sell right now is around 1.6%. Remember, in August last year as well, Vedanta had sold close to around 1.5%. The government of India in November, they went ahead and they sold 1.6%. And both those two times, the price range was between 485 to around 505 or thereabouts. It's good for Vedanta. Why? Because they're going to be considering paying out a dividend today. So the pass-through from the dividend that they got from Hindustan Zinc would amount to close to around 6 rupees 85 paise. However, with this additional money, you could expect a bigger dividend that will pay out because, they'll be getting money via the block. The other factors that are working for Vedanta, they have a value unlocking exercise, which is the demerger. We should hear about that. I think the next hearing is in early July. So that's one. The second factor is valuations attractive at 5 times EV per EBITDA. And the third factor is, since Vedanta, the listed entity, will get dividend and then they'll will get money from the block and then they'll pay out dividend, the promoter entity will be in far better shape. Just 1 point on Hindustan Zinc. The price is at a big discount to yesterday's close. However, there's a big open interest built up out there, a lot of shorts in the system. If in case this block takes place in the pre-open window, then in fact some of the shorts will have to run for cover. So that's the joke on the back with regard to Hindustan Zinc. Big open interest built up in the last few days. In fact, we'll be joined by the management of Hindustan Zinc. They'll be joining in shortly, but they'll be detailing their capex plans that they announced on the stock exchanges late last afternoon.
All right, Nigel. So that's about Hindustan Zinc and Vedanta. Vedanta positive. Hindustan Zinc, the only joker in the pack. If it happens in the block window, then there are a lot of shorts in the system. Management joins us too. But let's get across to Ria, who joins in with what's taking place for Bharat Forge and Polycab. Ria.
Morning, Mangalam. Let's take a look at Bharat Forge. First, they've signed an MOU with France's Sturgis Gaillard to offer AROC UAVs to the Indian Defence Forces. And as a part of this MOU, Bharat Forge is going to establish an AROC production line on site. Moving on to Polycab, they've signed an agreement to execute the middle mile network of BharatNet in Karnataka, Goa and Pondicherry. This is for a total contract value of rupees 6,448 crores for a period of 3 years. And they've also got a maintenance contract which will continue for the next 10 years. So positive news flow for both of these counters, expected to open in the green today.
Okay, all right, Ria, thank you very much for that. GMR Airport's RailTel in focus. Vinny has got details. Vinny, morning.
Hi, good morning. So GMR Airport, they've come out with their May data that's come in terms of what has handled the traffic data for GMR Airports. So they've handled more than 10 million passengers in the month of May. That's an uptick of around 0.8% on a year-on-year basis. Domestic traffic mildly up by 0.1%, while international traffic is up by 2.9%. All this we're comparing versus last year, May 2024. Now, obviously, do not forget that in the month of May, there were a lot of security issues and measures that were taken at the Delhi airport. There were setbacks coming in terms of restricted flights that were seen from Delhi airport as well. That was from May 6th to May 20th. And obviously, due to that, we had seen some bit of a subduedness. But despite that, overall, we're seeing a growth of 0.8%. So we're expecting some bit of green coming in on the screen here. RailTel Corp, they have received a letter of intent, and this is coming in from Zoram Electronics Development Corporation. 44 crores is the order size. It's expected to be executed by 5th of September 2026. And this is for implementation of mesofiber grid networks. The project mainly will be focusing on this. So keep an eye out on RailTel, and order win again. So we're expecting a positive move here.
Okay, all right. Thanks a lot for that, Vinny. Well, let's hop across to Vamakshi. She's tracking Ugrocap. Vamakshi, take it away.
Well, Nigel, the stock will be in focus today on the back of an acquisition. They've gone ahead and decided to acquire 100% stake in Profectus Capital Private Limited for 1,400 crores. The acquisition will be funded from proceeds of preferential issue of compulsory convertible debentures, that is CCDs. And to just decide on the same, a board meeting is scheduled on June 20th. So we'll be watching out for that. Now, just to give our viewers some context, Profectus had an asset size of almost 3,600 crores in FY25. They also managed to report a turnover of 420 crores. This acquisition is expected to be beneficial for Ugro, and that is because it will lead to an immediate 29% jump in the company's AUM. It will also add incremental profitability of around 150 crores and will be accretive in terms of ROA as well. It will boost ROA by 0.6 to 0.7%. So given that development, going with the green for Ugro Capital.
All right, a green for Ugro Capital, 1,400 crore acquisition is what they've made. But crude, that's on the boil. Almost $76, a little over $76 as we speak right now. The impact of that would obviously be felt on a lot of upstream and downstream companies and some of the users as well. Manisha joins in with all things crudes. Manisha.
Mangalam, thank you for that. Well, yes, we've seen 4.5% of gain come in for the crude oil prices. Interestingly, we haven't crossed above 80, something that the markets believe that if we continue this any longer and US gets involved into this directly, then we could be looking at higher crude oil prices. Well, clearly, there are a lot of ifs and buts when it comes to the crude prices. There also is, interestingly, an IEA report that suggests that the global oil demand will peak in 2029 and the Chinese oil consumption will peak ahead of that in 2027 itself. And then the markets are looking at much higher supplies in crude. So only Strait of Hormuz can be a turning point when it comes to the crude oil prices. Well, of course, with the kind of gains that we've seen in the overnight market, crude is now 10% up on the week and it's up 20% on month as well. As Israel-Iran conflict enters day 6, the markets are not shorting this one. There are still long calls continuing in case of crude prices.
All right, Manisha, thanks a lot for that. So those are a bunch of stocks, the entire list that we'll be watching out for today. In case you missed it, here's a quick recap. Stocks with positive news flow: Vedanta, Bharat Forge, Polycab. GMR Airports, we have Realtel Corp and Ugro Capital on the back of that acquisition, ONGC as well on the back of higher crude oil prices. Stocks with negative news flow, Hindustan Zinc, there is supply out there, oil marketing companies, even Asian Paints as it is a crude user. With that, we'll take a short break. On the other side, we have Galaxy Surfactants joining in to talk about the company's ambitious growth roadmap. We'll also connect with Devin Choksi of DR Choksi FinServ for some fundamental stock talk. Stay tuned. Welcome back. You're watching us here on Bazaar Morning Call. Let's welcome the first corporate on our show, Galaxy Surfactants. On our radar, the company has laid out their 5-year growth roadmap where they aim to double their volumes, grow their EBITDA by 2.5 times as well. Motilal Oswal is calling it ambitious but well-structured growth roadmap. Let's discuss more on this with K. Natarajan, who's the Managing Director and CEO at the company. Thanks a lot, Mr. Natarajan, for joining in. And it is an ambitious growth roadmap, right? 2 times volume growth, 2.5 times EBITDA growth. What does this mean in terms of revenue, the absolute number, and what product categories over and above the existing ones do you see potential in? If you could give us a sense on what this revenue mix will entail when you double your volumes from here.
So essentially, the revenue probably would go close to just above $1 billion based on the current market prices that we're talking about. And it would essentially, there's a huge focus in terms of how do we grow our specialty ingredients portfolio and also in the markets of US and Europe as we retain our significant share in the India and the Africa, Middle East, Turkey markets.
So if you could break this volume growth up, how much comes in from new products, how much comes in from your existing portfolio? Would there be an element of inorganic? And, from the geographies that you currently operate in, how does this volume growth come by? How much from the existing ones, how much from the new ones?
So based on the plan that we have, I think close to 50 to 55% would come from the existing products. About 30% would come from the new portfolio that we're working on, which comprises of emollients, esters, more on the leave-on skin and hair formulations, modern sun care actives, certain hair growth molecules. And about 20% would come from, the strategic alliances, partnerships, and something related to the beauty and wellness category that we have now made it part of our growth strategy. In that category of beauty and wellness, it's a huge category. Almost, you're talking about a significant market of 6 trillion, close to 6 trillion. And we are eyeing a market of about $20 billion of ingredients, majorly on the appearance part of the wellness category.
All right. Hi, Mr. Natarajan. Good morning and good to see you in. After a while, the street seems to be getting quite optimistic post the commentary that they've heard from you. So we'll have to track that because there's some optimism that's creeping in for the company. That said, I wanted to just focus on demand. The world has become a very, very uncertain place with regard to these tariffs. There are geopolitical issues as well. How is demand shaping up? If you could tell us on the international basis as well as domestically. And if you could break it up geography-wise as well with regard to where you're seeing strong demand as well as where it's still tepid.
The short term, certainly with all the geopolitical tensions that are there and the way commodity prices are behaving, logistics situation not getting better due to the recent escalations in the geopolitical situation. I think the near term is challenging, but we are very clear that we are in a very exciting growth industry and we have a huge headroom and runway for growth. And so our long-term plan is based on a huge amount of optimism and the short term continues to be challenging, but we are confident that this would be a temporary situation and we'll be able to tide over this. So as we remain cautiously optimistic on the short term, I think we're hugely optimistic in terms of the long-term potential of growth in this segment that we are participating in.
Mr. Natarajan, between performance products and specialty products, we've spoken about this earlier as well. These long-term numbers, so it'll move predominantly towards specialty products. The mix?
See, if you look at it, our strategy is comprising of growing in the markets of Africa, Middle East, Turkey, and India, where we do see a good amount of growth potential in the performance surfactants category because the per capita consumption has a huge headroom to grow, and most of the demand will start initially coming into the mass and masstige segments. The specialty portfolio will be majorly driven by US and Americas and Latin America, majorly Brazil. And so we don't see a huge skew happening towards specialty, but then we'll grow on both legs of this growth with clear focus geographies. And yes, there will be some amount of increase in our proportion of specialty ingredients, but nothing significant to change it because performance surfactants also will be equally growing.
For you to actually grow, the way you are, if you could give us a sense on what kind of capex would be needed, and currently what's the capacity headroom that you have? If you could, roll out the capacity utilization right now and the capex that would be required all the way up until 2030.
Our average capacity utilization today is about 68%, and based on the special new ingredients and new molecules that we will launch that are out of the innovation funnel, we would require capex to be incurred. And over the next about 5 years, we do see that we would have close to about 2,000 and odd crores of capex. And there would be some amount of inorganic growth acquisition as well that will be over and above this. But then, yes, we'll be able to provide more clarity as we get closer to getting something out of the drawing board.
Just a quick last question. I'll split into two. One is the very near term and the other one is the long term one. 2,000 crore capexes that you have, would you require to raise funds at some point in time to fund this and, for inorganic acquisition, etc. as well? That's point number one. And in the very near term, because we speak through you for the industry as well, you supply to the consumer industry, the FMCG industry, when it comes to detergents, beauty and wellness, all of these. How is demand in the very near term? Is there any improvement that you're seeing from the vendors' offtake?
So, with regard to the your first question on the fundraising that would be required, we have a healthy operational cash flows coming in, so we don't see any need to be raising any funds. But yes, if there are certain very exciting acquisition opportunities that require some amount of funding to be done, we have a very healthy gearing. We're just about 0.2 in terms of gearing, so we can access debt. So we are well positioned to be able to fuel our real exciting growth plans. Coming to your question on the short-term growth, this thing, it is challenging, as I said. We don't see India, we still don't see any green shoots. We do hope that the monsoons being good and the sort of Philip government is trying to do in terms, government has done in terms of putting more hands in the hands of more money in the hands of consumers, should start showing some results. So we're keeping our fingers crossed. Probably we need till H1 of this financial year to get more specific in terms of the outlook. We do rest of the world as of now seems to be holding. We have a good this thing going on as far as Latin America is concerned. Right. We do have Africa, Middle East, Turkey holding up. So yes, with these geopolitical tensions that have recently got escalated, we need to keep a close watch.
All right, thanks a lot. We will keep a close watch on your business in the near term, the consumer sentiment, and more importantly, over the long term, how these parameters are tracking for your vision that you've laid out for 2030 as well. Thanks a lot, sir, for joining in and giving us an outlook into your business. With that, let's welcome Devin Choksi, the MD at DR Choksi FinServ, who joins in now. Devin, have you looked at Galaxy Surfactants? You heard in the management. What are your views?
Mangalam, I think good morning. Well, I guess the both personal care and home care businesses are definitely driving the higher amount of growth prospects for most of the companies. And companies like Galaxy Surfactants, who are basically ancillary suppliers to some of the large FMCG companies, they remain, in a strong position also because of the fact that because of the product innovations that they continue to do. The commentary sounds reasonably optimistic at this point of time, though they are very, very cautious. And understandably so because of the impact on the raw material prices due to the global logistic disturbances. Should that be the situation, then probably margin would be something which one will have to look at, at least for next 1 or 2 quarters till the time the situation settles down. But otherwise, I think the growth prospects remain bright for the sector as a whole, and I think the product innovations that they have been carrying out. So certainly interesting proposition at this point of time. Should market give correction due to any reason, I think this could be considered as an opportunity.
Okay, all right. Hi, Deven. Good morning. Good to see you, Ben. I think the stock of the first couple of hours, one of the stocks is going to be BSE. And our colleague Yash, hit the nail on the head. He was the lone voice out there. He said that, in all probability, NSE is going to get Tuesday, while BSE will move to Thursday. And that's what's happened. That's going to lead to some market share loss as well as some volume loss. But the stock has already corrected 10% from the recent peak. Your view, if BSE starts weakish, what would you do?
Yeah, Nigel, good morning. Well, I think it's going to be, $1 million question for every one of us as to how they're going to corner the volume that they want to do through the Thursday expiry now. I think it's going to be a little bit challenging, of course. But as I understand, though not fully clear about how exactly it will roll out, there seems to be, a very large game plan behind this particular game. And that's where probably, one would remain a little bit more watchful at the same time. Immediately difficult to say how much it is going to impact the volume loss, etc. On the paper, based on the past traded data, I think one would definitely argue that yes, I think there is going to be somewhat of volume loss, but I believe that there should be a strategy in place for BSE wherein they opted for Thursday expiry. So let's see how exactly they roll it out in times to come. We'll watch it out at this point of time. No buying, of course, because the valuation-wise everything is fully priced as at this point of time, as I see in the stock.
Absolutely. Devin, the other thing which happened last in the closing hours was pharma stocks all sold off. Sun and Dr. Reddy's, and the index itself took a bit of a dip, down about 2.25% on those on that tariff news again. It's more sentiment at this stage rather than anything. This morning we've got one more sentiment-related news, which is the solar stocks in the US, for example, which have sold off sharply, 35-40% in some cases, on news that the Senate, one of the houses of the Congress in the US is moving a bill to end clean tax credits for solar companies while extending them for geothermal and nuclear, etc. Any thoughts? Two different areas, but I guess you'll see a reaction here on the latter today. Go on.
Yeah, Prashant. Well, I think pharma, lesser we speak, better it is, because I think every single day there is a threat on the tariff coming up. And I don't think that beyond the point one should go very seriously on this particular aspect. Largely because of the fact that Indian pharma companies, particularly the top-end Indian pharma companies, are into the specialty generic business, and that's where probably they hold the power to do the margin accretion for from the markets in which they're catering to. US, of course, remains a big market for all of them, but at the same time, the given the kind of strength of the specialty products, I believe that most of the companies are reasonably confident internally, even if the tariff issues are coming in the way. So not completely sure, and at the same time, whether it is a threat or it is going to be getting implemented, one remains to see this particular aspect in detail. Not any particular view at this point of time, largely because of the fact that one is holding on to pharma companies, one should stay invested. Fresh investment, only the corrected price, because everything is in price at this point of time. They are fully matured, I believe, as far as the valuation is concerned.
Got that. And, just before we let you go, Deven, a word on Reliance, because that stock obviously has been an underperformer of its highs, but everyone's playing the upstream crude companies on account of the spike that we've seen in crude oil. Do you think Reliance stands to benefit from it? At these valuations, how does that stock look?
So my understanding is that leave aside this temporary spike, in the crude oil prices, and the resultant problems that one could arise, because of the logistic-related situation, because this could be a hotter phenomena as far as the situation is concerned. But on the whole, the consumer-facing businesses are suggesting that they would go separately listed. And should that be the situation, in my view, Reliance would remain in a buy position from the market perspective as well. We remain fundamentally strongly convinced about the growth prospects for each of the consumer-facing businesses. Apart from the contribution coming in regularly from the new petrochemical segments in which they are operating. So certainly, I believe that I think one will have to remain a little bit more watchful, of course, on this side, but confident as far as I think the growth prospects are concerned.
All right, very quickly, Deven, I wanted your view on Hindustan Zinc. You know, we have been highlighting that over 500 rupees, you have two parties out there that could possibly take some money off the table, the Government of India or Vedanta. And Vedanta normally times it better. That's precisely what's happened. They're going to be looking to do a large trade. And I believe demand is fairly okay, because they've priced it as well at a sharp discount. What is your view on both these two names? Hindustan Zinc, because the block will get out of the way and then there's a cool-off period. And Vedanta, who will get the money?
We are reasonably, I think, confident about the prospects for both these companies. Hindustan Zinc's both the zinc as well as the silver business, I think they are in a super demand. And I believe that the kind of expansion program that they've launched would probably give them further advantage going forward. So immediately, I think the benefit would be seen only after 2-3 years. But we believe that I think that's going to be a major part. Vedanta, of course, I think getting money in hands is definitely, I think, a good sign at the same time. And not forgetting that I think these businesses are getting demerged and separately getting listed. So certainly, I think we remain reasonably confident about the growth prospects for Vedanta in general and Hindustan Zinc in particular.
Okay, all right, Devin, what we're going to do is take a quick commercial break here. We'll get you some technical ideas as well on the other side. Sudarshan and Mitesh are going to be with us for that. Stay tuned, coming up. Okay, welcome back. I think we've got 8 minutes to go for the pre-open session to kick off. Sudarshan Sukhani and Mitesh Thakkar are with us with what they want you to do as we start another day. GIFT Nifty indicating a 30-point lower start. Gentlemen, good morning. Great to have both of you here. Mitesh, so 100 points lower. I mean, generally a bit of a risk-off sentiment. Oil is up, but the mood is not down anyway. It's generally upbeat, hoping that things will cool off, and expectation. I guess there is recency as well, right? Things have piped down pretty fast. What's your sense? Trading, though, is a different game. What would you recommend?
Yeah. Prashant, I think, it's a market which is consolidating. I've been saying that much, and at the cost of repeating myself, I think it's still a market which is showing signs of contraction, lower volatility. I mean, it can be volatile, but I think it will be ranged. And the counters I've stated earlier as well, 24,500 to about 25,050. I think we still have no signs, with most of the indicators remaining flat, that, we will see some kind of a directional move. So I think we must assume that this range will continue for next few days, and therefore trade more stock-specific bias. What has happened recently is that we've kind of come up from the upper end of the range, and maybe, we'll head towards 24,600, 550 zones, where we would look at some kind of buying opportunities.
Right, Mitesh, good morning. But, Prashant, you spoke about the resilience and the optimism despite the war, etc. I'll tell you one thing. The index which is at a lifetime high right now is the MSCI Israel index. Yeah. The Tel Aviv index is actually at a record high.
Even on Sunday, in fact.
On Sunday, yeah. So, you talk about the war being Iran versus Israel, the uncertainty out there. The one which is in the eye of the storm is actually at a record high. So all the hits are on portfolios around the world and not just that country. But Sudarshan, your call on the index and individual stocks?
Yeah, good morning. Well, like yesterday, I would expect the Nifty to be choppy today. The markets have already given the big up move that they were looking at. And now they're going to pause and consolidate and then decide what next to do. So today's trade is not clearly visible. There is a trade because in this choppy market, we are still, as I think Prashant said, there is a sense of optimism, underlying optimism. So if you find a dip towards 24,700, that level becomes a buying opportunity with a tight 24,600 stop. Again, if you don't get a dip, I wouldn't do anything till I find a low level buying opportunity. Now for the stocks are, giving the same reflection as the index is doing. Not very good opportunities, but still it's a list. Astral is a buy with a stop under 1530. TVS Motor is a better buying opportunity with a stop under 2718. Indus Towers is a buy, and there is news all the time on Indus Towers, but still with a proper stop loss, you could buy it with a stop under 383. And Tata Communications is a buying opportunity with a stop under 1680. I must explain that like the index, the stocks are likely to be choppy.
Okay, got that. Sudarshan, Mitesh, coming across to you. What are the individual stocks you're looking at?
I have a mix of buys and sells. The IT pack has been looking strong to me. So Infosys is something which I recommended earlier. Now is a fresh buy with a stop at 1620 for targets of 1680. Maruti is a buy with a stop below 12480 for targets of 12850. A sell and Lupin with a stop at 1961 for targets of around and below 1900. And Container Corporation or Concord India is a sell with a stop at 761 for targets of 730.
Okay, all right. I think what we're going to do is take a break here. Gentlemen, speak to you again soon. 4 minutes to go for the pre-open session. We'll take a quick commercial break here. We're going to come back with Arun Misra of Hindustan Zinc. We discuss the company's CAPEX program and outlook going forward.
Well, Hindustan Zinc is going to be in focus for a lot of factors, right? Overnight, you have silver prices that had spiked up. But we'll connect with the management to discuss what went on with regard to the capex that they have announced and how do they see things panning out on that front. And besides that, we'll also wait by because Vedanta is likely to sell close to 1.5% in the companies. And Hindustan Zinc is our next management on the show. The company announced its plan to set up a 250,000 integrated zinc metal complex at the Bari, Rajasthan, which will amount to a capex of around 12,000 crore rupees. Now, the capex that they have mentioned will be funded by a mix of internal accruals as well as debt. To help us out with how things will pan out for the company and what is the longer-term vision, we're joined by Mr. Arun Misra, the CEO and whole-time director at Hindustan Zinc. Hi, Mr. Misra. Good morning and good to speak to you. Well, congratulations, actually, because the last couple of quarters I've been pushing you. What about the capex plan? And this time around, you have announced it. But the street believes at 12,000 crore for this kind of an expansion is on the higher side. Can you justify it? Why is it 12,000 crores for such a small capacity?
Oh, so this capacity is not just a smelter. This capacity includes, your another roaster, melting casting, fumer. No, earlier days we never used to build smelter with a fumer. Now we have taken fumer from the very beginning. And along with, of course, leaching, purification, cell house, at the same time, we'll put up a mill for processing of ore and then, of course, mining expansion. So altogether, 12,000 crores for creating this capacity from mine to smelting and 250,000 tons of metal. It's a good money. And to us, it's a benchmark capex that we are proposing.
Okay, all right. So you're justifying it by saying it's mining till smelting. Everything is included, and that's why the capex is at this number of around 12,000 crores. But if I take phase one, which you've announced of 12,000 crores, and I take phase two, put it together, that will move to what? Approximately 30,000 crores of total capex, phase one and phase two put it together?
So that number we have not yet frozen because phase two will see, say, 450,000 tons of zinc smelting. It will also have 200,000 tons of lead smelting, expansion in mines, putting up new mills, some debottlenecking of existing mills, and also another 750,000 tons of silver refinery. So I can't put a number tag to that, but we are working on it. And I think in about 45 to 50 days, we should come back to board and then maybe make an announcement.
Mr. Misra, if I got that correct, you're saying 45 to 50 days. Just to reconfirm, so this phase two of capex will be announced within the next 2 months?
Absolutely, absolutely. Because we as I said, in a manner of 2 to 3 months, we will make entire announcement for 2 million ton project expansion. We have taken this strategy this time because we finish one part and then make an announcement, take board approval, then finish another part instead of waiting for entire 2 million ton thing to be designed and done and all that.
All right. With regard to the phase one capex, how much of progress have you already made? Have you already ordered the machines for the phase 1 capex?
Yes, immediately it will start. So now that we have the board approval, so it's maybe another 10 to 15 days, we should intimate the business partners who are supposed to work on various parts of that. And then, yes, we should be able to hit the ground once regulatory approvals are in place.
All right, Mr. Mishra, you generate solid cash, but you have said that this 12,000 crores will be a mix of funding, the split between debt as well as internal accruals. Break it up for us. How much of debt will you take on your books?
It's roughly about 50-50 only. So we will do that. Debt we will decide depending upon how we are progressing. See, roughly in my calculation, we do about 10,000 crores of PAT year on year. If we do that for 3 years to 4 years, it's about 40,000 crores we are talking about. So we shouldn't be there, and this will be also spent over about 4 years. So we have enough of internal accrual power to fund the project, but also we will have to take care of strategic interests as well. So we will take some amount of debt, maybe up till about 40 to 50% of the project cost.
All right. Well, if the focus now shifts to expansion, then does the dividend payout that the street has been very, very excited about in the last couple of years, will that now take a back seat?
So dividend is a matter of a board to decide. But however, this project we are doing for creating more and more value for the shareholders, whether it is through the dividend or is through the market upside, both ways. So as of now, we will have enough firepower. See, we look at our balance sheet, net debt, there is no debt being there. So overall, we have enough of money available for whatever way the shareholders decide to distribute.
You know, Mr. Mishra, if I look at a 10-year, average volume growth, it's been very, very subdued at less than 2%. But now the volume growth in the next few years should be better once this capex sees the light of day. However, in the near term, will you change your volume targets that you've already laid out for FY26?
No, as of now, FY26 volume we are not revising, and that we'll have to wait after the H1 performance. We will revise anything there.
Okay, all right, Mr. Mishra, we appreciate you joining in, detailing that capex plan, and we'll wait by to see that large trade that we're expecting with regard to Vedanta selling 1.5% in the company.
All right, interesting conversation there. Well, let's just focus on the other story, right, which is the expiry day, which has now been fixed. So NSE's essentially got Tuesday, BSE's now moved to Thursday. We reported this for the first time on the 22nd of May, and it's now, of course, and we reported yesterday during market hours that intimation is going to come today, and it did come yesterday in the evening. I think we'll have the pre-open is on, and I think we're towards the second half of the pre-open session. The BSE stock we should just put up in terms of what it has done. It's already corrected 10% coming into the decision yesterday, so keep an eye on that. So absolutely, okay, 3%, 4% lower, but 100 rupees is what you have in terms of a cut. Rajesh Baheti is MD at Frostys Capital Services. Rajesh, good to have you with us here. Good morning. Rajesh was with us once the news broke yesterday in the evening. But just quick thoughts, Rajesh, beyond the here and now. I mean, for some reason, so much anxiety and chatter around this one in terms of who's going to get what. It's important, and there will be a shift of volumes, etc. So in that sense, yes, definitely important. We're good to get the story right. But beyond the near term, how is this going to play out in terms of market share, in terms of volumes on both exchanges?
If you go back into the history and in November when SEBI rung in the changes, the top two contracts that were traded in the F&O segment were the Bank Nifty and the Nifty. And so with the changes when SEBI said that each exchange is allowed one contract, really cost NSE a lot of market share. And what subsequently happened was that NSE had the Thursday and BSE chose Tuesday. And what it did is post the Tuesday expiry, NSE got 2 days to expiry, whereas post the NSE expiry, BSE had 3 days to expiry. So somewhere down the line, then NSE moved to Monday in order to counter that loss of market share. And then we know what happened, that SEBI said enough of this, and we are going to designate 2 days, and they designated Tuesday and Thursday. So after facing all these losses, I think there was some thought of some kind of give back and allow NSE to move to Tuesday. So they had 3 days versus 2 days for the BSE. For the long term, I think people are already now looking at 2 days of expiry, Tuesdays and Thursdays. We've fallen into that Tuesdays and Thursday expiry, except now that the contracts will change.
Rajesh, one thing we've talked about in the past as well, since algos now, etc., are such a big part of it, right? The entire market trading, a lot of the backtesting on algos, etc., would have happened on Thursdays, right? You know, all that will have to kind of sort of change a little bit. What's your sense?
Yeah, so obviously, whenever you change an expiry, you know, your reference point changes. There's no historical data with respect to that expiry, so it creates a little bit of a problem, maybe a short-term dip. But if you see that the BSE index and the NSE Nifty, these are the benchmark indices, they are reasonably correlated. So you could have a situation where algos kind of run based on the BSE historical, that the Tuesdays will behave similarly for NSE and vice versa. So I get the feeling that though it might cost the algos a little bit in terms of backtesting ability, they are likely to go forward thinking of the BSE backtest as a substitute for trading the NSE in the future.
Right. Rajesh, you know, at the end of it all is the price of the option. And the price of the option is affected by 5 underlying variables. Whether it's 2 days, whether it's 3 days, that would eventually then reflect in the price of the option because it's theta, right? Time to expiry. So to that extent, why should there be any market share loss if both are given exclusive days? Just trying to understand.
So let's be honest that the market veers towards the near-term expiry. So even though you have monthly expiries, you have various expiry contracts available, that the market likes to trade the ones that's closest to the expiry. When the NSE would expire on Thursday, people tended to move to the BSE for the next expiry, which was the BSE on Tuesday. And so you had Friday, Monday, and Tuesday. They got 3 days out of 5 trading days to trade the BSE. After the BSE expired, then you moved back to the NSE and you got Wednesday and Thursday. So what happened in this is despite the fact that NSE had to give up Bank Nifty, and keeping Thursday was costing NSE in terms of the number of days also it had on the nearest contract to expiry. It had 2 days versus the BSE got 3 days. And I think that was rankling the NSE, that we've had so much to give up in terms of the most successful contracts. And here we are losing market share in terms of the number of days we have for the nearest contract.
So to that extent, what do you think would be the impact on BSE's market share? Because there are a lot of brokerage notes. One came yesterday, estimated about 300 basis points. There's one which came today, 350 to 450 basis points. Do you think that's a fair estimate, or could the impact be more or less?
Logically speaking, what has happened with all this geopolitical stuff going on, people don't generally like to take a large open position on a Friday. So effectively what we were doing was the BSE was trading more on Monday, Tuesday, and the NSE was trading more on Wednesday, Thursday. So the Friday being added to the NSE is going to probably take away the Friday volume, which was, I think, historically in terms of open interest, in recent times would have been just 10 to 15% of the entire open interest. I think that will move to the NSE. So in terms of market share, you could argue that you're going to have the BSE maybe lose 500 to 600 bips to the NSE. And that shift will happen because whatever you want to do on a Friday for a near-term expiry, now you won't do on the sensex and you'll instead do on the Nifty.
Okay, Rajesh, thank you very much. It's a story with so much interest. One, of course, it's got all elements, right? I mean, it's got 2 exchanges kind of in a way fighting it out. There is, of course, the futures and options market, and so everything in it. But glad that we got it right. As I said, we reported this first on the 22nd of May, and now it's, of course, news in that sense. Sudarshan is back with us with his 9-10 calls, and so is Mitesh. Sudarshan, what do you have?
Well, let me tell you, I am an options trader, and now the NSE trades will have more days to the weekend. So I think BSE will face significant pressure. It is Tata Communications buy Tata Communications with a stop under 1680.
All right, Mitesh, your 910 call?
I'll go with a buy on Maruti for targets of 12,850.
All right, gentlemen, thank you for that. We're speaking about BSE versus NSE. Vamakshi now joins in to tell us what brokerages are making of this. Rajesh expects a 500 to 600 basis points decline in BSE's market share. And Sudarshan himself anecdotally said that he'll be trading a lot more on the Nifty options. Vamakshi, what are the brokerages making of it?
Well, Mangaram, the Goldman Sachs is expecting an almost 300 basis point loss in market share. Motilal Oswal expects anywhere between 350 to 450 basis points of market share loss. The volumes could get impacted as per certain brokerages, and they have also gone ahead and revised their estimates. Goldman Sachs has cut their FY26 EPS estimates by almost 2%, but they've kept FY27 and 28 EPS estimates largely unchanged. For Jefferies, they've gone ahead and trimmed EPS estimates by 1 to 2%. They're factoring in lower volumes. They're also expecting 5 to 10% impact on volumes in the near term. But however, they're factoring in a build-up in volumes thereafter. Motilal Oswal too has gone ahead and reduced their premium ADTO estimates for FY26 as well as 27. And they've reduced their FY26 earnings estimate by 9%. The same for FY27 has been reduced by almost 12%. But there are some bit of offsets that could work in BSE's favor. Goldman Sachs said that BSE could gain half a percentage point share per month from September onwards, and they could get back to 24% share by March 26 and maintain that level over the medium term. Jefferies believes that BSE's ability to build liquidity in the longer term contracts could offset this impact, and implementation of the common contract note can aid market share in the cash segment. As far as recommendations are concerned, most of them have a neutral call. Motilal Oswal, in fact, has downgraded their rating to neutral, and the target price will come up for you on the screen.
Right. Thanks very much for that, Vamakshi. So that's, of course, top of mind. We'll see how it goes. 65 points lower on the Nifty. We've got about 270 points cut as far as the sensex is concerned. And we're just starting up with the first rates as they come up on your screens. We'll look at the indices and we'll look at stocks after that. So 24,790 is where we are at. So I mean, it's a flat, slightly lower kind of start. 55,600 is where the Bank Nifty is at, again about 0.19, 0.15% lower. Sensex is at about 81,358, about a quarter down. Small cap index a quarter down. The mid cap index is, I think, also down about a 0.25%. So uniform 0.25% cuts across the board at this point. I mean, right out of the gates, it's largely 1:1 in terms of advanced decline, although that will start to show up in a more pronounced way as we go through the session. Nifty heat map should give you a quick sense of which way things are starting out, and it's mostly down. I mean, I think almost 40 odd stocks are lower, about 10 stocks are higher this morning.
Well, a couple of stocks. We start with BSE. The street was anticipating a big gash. That hasn't happened. In fact, BSE is just about 0.8%, 1.2% now lower as we speak. So, the pre-open was a much sharper cut. Right now, as we speak, the cut is accelerating just a little bit, 1.5%. Hindustan Zinc, the block trade has happened, down 6% right now. So let's see where this goes from here as well. And then we are seeing some stocks which continue to do well. Zydus Wellness, yesterday there was that large trade that took place in pre-open. TPG sold out. The buyer was Parag Parikh Fund, and that stock has opened with a gain of almost 3%. Axis Cades is the other one, which from yesterday's up move of 5% continues into today as well. But just as Hindustan Zinc was lower, we have Vedanta, which is higher by about 1.8%. So they get the money. Also, things look favorable for them, as Nigel pointed out earlier. Polycab, the BharatNet business doing well for them. That stock up around 1.5%. On the way down, Biocon, after the QIP opening yesterday, 4,500 crore, opens about 2% lower. And Voltas as well, the management did meet some analysts, made a comment on how demand was impacted by unseasonal rains in peak summer months, and that stock too is down about 2%. Nigel.
Well, that's right. The Hindustan Zinc large trade has got out of the way, so now all eyes are on Vedanta. They have that dividend meet today, and let's see how much is on their radar, because they got close to 2,500 to 2,800 crores from Hindustan Zinc. Now they'll have additional money, so we'll have to see what do they want to do with that. So that's a stock that we'll be keeping on our radar. Sterlite Technologies cooling off after the big run that we have seen in the last couple of days. BSE, from the lows of the day, actually, it's seen a solid recovery, actually, BSE, because the markets as it is were sensing that there's something coming on those lines. So if you look at it from the day's low, the stock has bounced, I think, close to around 3.5%, 4% or thereabouts. A bit of shorts, I think, covering out on BSE itself. Sky Gold, there's a large trade, I think, that's taken place because volumes are very, very high. The stock is down close to around 5%. So keep an eye out on that one as well. HCC, that's another name. That's a little bit lower on rather large volume. So that's another one. I think from the Nifty, the top gainer actually right now is IndusInd Bank. Big move, big volumes, stock up 3.5%. And as we did that market check, the Nifty from being down by close to around 70 points is now down only around 20 points.
There's one stock, it's Avenue Supermarts. I'm looking at that one. It's up around 1.5%. Has been doing okay-ish this week. It's up around 2%. An interesting development that took place yesterday. They opened their first store in Uttar Pradesh. And typically, their cluster-based expansion tells you that if they open the first store, over the next 6 months, the store expansion in that space is much more accelerated. And the one thing that the street was eyeing for Avenue Supermarts is store expansion. If they go into the most populous state of the country and expand out there, that could be a positive for them, which explains why the street has taken this opening of one store positively, because it suggests opening of many more stores.
First in UP.
First in UP.
Oh my God, that's 20 years after, 25 years later, right?
So I remember this, conversation once I happened to have with Radhakishan Damani, in private, and he said that if I don't see 20 stores in a place, I don't open even the first store. This was pre, DMart listing.
Okay, all right. So keep an eye out on this one. Interesting, 1.5% higher. So 4116 is where we have the DMart stock, the Avenue Supermart stock, which is starting up. Well, I think market breadth is down in a pronounced way. 1,500 stocks are lower, 630 stocks are higher, and that's clear skewed lower at this point. Sky Gold is down 4.5%. I think we mentioned that, and of course Hindustan Zinc is down as well. Vari is down 2%. Nothing large. Premier, which is the other solar company, that also comes up. I remember speaking with Premier recently, and they said, well, there's enough demand locally, at least for the next couple of years. So exports is optionality. So it's not as if, that's what they're depending on in that sense. So keep an eye. Voltas is down 2%. So these are some of the big volume-led losers. Our Power has been a stunner mover this year. I think it was down 5 yesterday, 5 today, but just profit booking, but almost 500,000 shares on it. Already on Reliance Power. Orient Cement is seeing an outsized move. Orient Cement is down 14%. I think yesterday also but yesterday it had a large move on the upside. So a close on Monday was 288, close yesterday was 300 plus, and back at about 260 right now. Orient Cement, so 74,000, 75,000 shares traded. Happiest Minds down 2. Sterlite Tech has had a phenomenal move led by very large volumes over the last few sessions. And Sterlite is seeing some profit booking down about 5%. Some of these are just pure reversals. Look at something like IKS. IKS was up 7%, it's down 5% today. So I guess little to sort of take signals from these kind of price actions, which are just sort of flip-flop from one day to the next. Mihir Vora is with us. He's Chief Investment Officer at Trust Mutual Fund. Mihir, good morning. Great to have you with us here on the program. Thanks very much. Just your first take on markets. Price action is slightly negative, but I guess markets have, over the last few years, with so many conflicts, have learned to kind of ignore or live with these conflicts and look ahead a bit more optimistically. So the mood's not really dulled out. How are you feeling, Mihir?
Certainly. Good morning, Prashant. Thanks for having me. You're absolutely right with the market over the last 20-25 years has gone through that huge learning curve, which is the fact that India is such a large market, geographically also so large that we are quite resilient. And I think the biggest change that has happened, I would say, in the last 10 to 12 years is the fact that we've actually managed our macro very, very well compared to the rest of the world. For example, India is the only country which has reduced its debt to GDP in the last 10 years, even through COVID, etc. So the point is that our currency, our current account, our fiscal, all are looking excellent in terms of the relative scheme of things if you compare it to any developing country as well as the developed world. More importantly, I think structurally now people realize that India may not grow at 10%, But now China is not also growing at 10% anymore. It's probably more close to 4 to 5%. So India will actually be the fastest growing economy in the world. So whether it's the domestic investor sentiment, whether it's the FII sentiment, India stands head and shoulder above a lot of other options out there in the market. More and as we keep saying, the local investor has finally come of age. The SIP flows, the pension fund flows, the EPF flows, the insurance flows are now structurally, out there in the market. We are seeing hundreds of thousands, millions of investors getting added to the base every month, and that's what's, I think, keeping the overall sentiment up. We can talk about the micro and the short-term situation where it's a mixed bag, but in general, I think the structural India story has only become stronger over the last few years.
So in that case, what would be the sectors which you believe would outperform? What specific stocks are you backing, Mihir?
Sure. So, as we have discussed so many times in the past, we continue to believe because India's domestic story is far better than the global story, we will continue to stick to the domestic plays, whether it is, in financials, lenders, as well as the capital market link plays, the savings link plays, whether it's the infrastructure and, CapEx story, both from the government spending point of view. And now we are even seeing green shoots in the private sector capital expenditure, and plus the special areas like railways, defense, etc., that the government is very, very sharply focused on. The mixed bag, I would say, is in consumption, where FMCG, of course, is a lower growth segment. Urban consumption, which was holding up, is kind of maybe not picking up as well as expected. But structurally, I don't think there's a problem there. Over the long term, it should do fine. There is a lot of premium discretionary consumption that is doing quite well even as we speak. So I think premium domestic consumption, savings link plays, capex link plays are something that we would continue to be overweight. Pharmaceuticals, etc., we would be more, healthcare, pharma, we would be more stock specific. And, IT in general, we are underweight because it's more of a global play. Especially the large cap ITs are probably, low growth stories, not as high as they used to be. And of course, the steady growth utilities, etc., with 10-12% growth, we would be underweight because we are looking at higher growth stories.
Okay, hi Mir. Since you briefly mentioned capital market plays, which side are you drifting towards with regard to the stock exchanges? BSE and MCX have been absolutely on fire. They've re-rated. Valuations have got very, very expensive out there, but there's still so much of interest. Now, this morning you have some negative read-through for BSE, but the stock still is seeing buying at lower levels. What's your preference between the listed exchanges? And also, if you want to put in a word on the unlisted NSE stock, which has done a jig of its own.
Sure. So I think I won't comment on specific stocks, but I think the stories that we are playing is basically not only the growth of the pie, the trading pie is going to increase, whether it's from the established exchanges or from the challengers. But more importantly, we are also in some cases playing on newer product introduction, market share gains, etc. So these are stories where we can get the benefit of the tailwind of the industry growing, as well as product improvement, market share gains. So those kind of stories we are playing in our portfolio.
Just a word, guys, with regard to Orient Cement, there was an open offer, so there's a particular number of shares that get blocked, right? So the open offer is out of the way, the kind of support that you've seen because of the open offer. So it seems that the remaining shares could have possibly got released, for being made available for trade. So that could be one of the reasons. And also in the past, when Adani Cement went ahead and they took over Sanghi Industries, the result was not very, very great for Sanghi Industries because everything was in favor of the parent, which is the Adani Cement Group. So because of that, I think that support goes out of the way. Open offer, I think, ended last week. So with that getting out of the way, the stock is down. And as Prashant mentioned yesterday, I think it was higher.
Yeah, it was higher yesterday. The other Adani takeover recently has been ITD, right? ITD Cementation. And that one has gone the other way. I mean, I think since the offer finished, it was lackluster for a while, from 500 to 800. It was $500 on the 5th of May, and it's at 800 now today. So that's been a very, very sharp move, which has come through on that one. It's up 3.5% today as well, I think. Yeah. Otherwise, it's it's 1,200 up, 1,000 down. So market breadth is now sort of swung the other way. And we will keep an eye out on things as we go along. I think anything new, anything else? Ask Auto, that's up 9%, it's coming up with some 9%, big volumes as well. So that's why I'm mentioning that here. LG Equipment is up about 4%. Mangalam was talking about DMart. DMart's now moved up a little bit more, 2% higher on DMart as it sort of forays into, the largest state in the country, Uttar Pradesh, and so on and so forth. So lots of stuff. JSW Infra is up about 2%. Uno Minda is up about 2.5%. So that's the state of affairs this morning. Just a quick word, Meir, if you will, on, I don't know if you have a view, and there aren't that many listed, but there are a few solar stocks. Every time there is news flow out of the US with regards to, the thrust is, of course, geothermal, nuclear, even coal, but not renewables in that sense. In the US, with regards to these tax credits, etc., we've seen 2 developments last night, and the stocks, etc., sold off. Does it have implications for India? Companies have told us when we've spoken recently, companies like Premier, etc., that there's enough demand, at least for the next 2-3 years, till enough supply comes up to meet the demand. So exports is like an optionality. What is your sense?
Sure. So in the renewables space, we are playing across the spectrum, solar as well as the wind part. But we have not typically taken exposure in cases where there is a dependence either on subsidies or on exports, because the US situation has turned adverse ever since the likelihood of President Trump coming to power has been there, and that's because this is not an area of focus for President Trump. So to that extent, over dependence on exports is something that we have avoided. We are positive on the generators in the renewable space, because I think the government is very serious, and any input price reduction, whether it's at the domestic level or from China, only helps the generators. So I think we would stick to the energy generators, and in certain cases, the equipment providers in the wind space.
Okay, all right. President Trump's not too focused, it seems, on renewable in comparison to what the street expected, but he's quite focused on drill, baby, drill. Meir, if I got it right, I remember in your earlier avatar, you were focusing on some of these pipe companies, and you got the timing very, very correct, on a couple of these pipe makers. With the kind of focus we have seen on oil, crude as well is fairly stable at current reckoning. Do you like anything from that pack? The notable stocks are Welspun Corp. You have Jindal Saur as well that corrected a big deal, but they as well are putting on capex. Smaller players, Man Industries as well has ordered a couple of big order wins. So it seems big orders coming out of the Middle East. President Trump as well, out there, they are laying various pipelines. What do you like from this space?
You're right. We have one of the names that you did mention in the portfolio, and the reason is exactly what you said, that both in the Middle East as well as in the US, there is a case for more drilling, more production, and some of the companies that we own also have facilities in the Middle East as well as in the US. So they will tend to benefit even if there's a US Atmanirbharta, so to say, situation.
Right. Where do you stand on autos? Because as we speak, we're seeing some traction in names like TVS Motors, a lot of the domestic focused names that you like, and if you believe that consumption is likely to pick up, at least in the discretionary end of things, is there a play out there, or you would stay away from autos for now?
So in autos, we have more exposure in the auto Ang space, but that's on a case-to-case basis, not taking a call on the segment growth. But in the OEMs, we have 2 names. One is a two-wheeler name, and one is, I would say a mix of SUV and tractors, because we do see high-end, as we mentioned, high-end consumption, which includes SUVs, that's doing quite well even now. And rural economy speaking up, the tractor segment is going up. So we have stocks which OEMs, we have exposure to that segment. And in the two-wheelers, we have a name which is anyway quite strong, and which also has a decent exposure to the EV two-wheeler segment.
Okay, well, thanks very much, Meir, for joining us. You may want to listen into the next conversation because we're speaking with one of the largest public sector banks in the country, Punjab National Bank, next. Remember, last time when we spoke with PNB, post their fourth quarter performance, the management told us that they're confident of beating their FY26 credit growth guidance of 11 to 12%. Now, of course, there is RBI's double bonanza. So RBI is really pushing the pedal as far as growth is concerned. How's the outlook looking for them now, and what changes have they made as far as their borrowing mix and, of course, lending rates, etc. are concerned? Let's get an update. Mr. Ashok Chandra is Managing Director and CEO at PNB, and he's with us now. So good morning. Great to have you with us here on the program. Thanks very much. So just give us the basics, across the liability profile and the asset mix. What are the changes that you've made since the RBI moved?
Yeah, first I will talk about the liability side. In fact, on 12th of April, which was our foundation day, we have initiated a lot of new initiative backed by the digital side now. And all my CASA products are revamped now today. And we have the special products for all the segments like salary, non-salary, women, youth, defense, pensioners. Even for farmers, we have come out with a new scheme. And I can tell you the success of that scheme that in the last 1.5 months itself, more than 6.5 lakh new accounts which we have opened under this segment. With additional, the saving portfolio in the individual has grown up by 1,000 crore. So we are mopping up the SB individual with the revamped saving schemes which we have brought in the system. So we are very confident. The liability side, we don't feel any challenge. We have the enough liquidity in the system. Now, as far as the RBI announcements are concerned, I think we must appreciate the the credible move RBI has made by reducing the repo rate by 50 basis points. And if I see that entire the calendar year, almost 100 basis point reduction has happened. Definitely for 1 or 2 quarters, means Q1 and Q2 of this financial year, definitely the NIM is going to be impacted. But this is all the journey, and we are planning to adjust this the gap which is going to happen in the NII and the NIM by reducing some of our deposit rates. I think in the last week of this month, we are going to have the ALCO meeting, and then we are going to decide about our various rates now.
So just one thing. So Q1, Q2, maybe there will be some impact on NIMs, but
yes,
once you make the changes to deposits as well, will there be any durable, sustained downward pressure on NIMs, 10-15 basis points, or you think,
See, in the shorter period, definitely the Q1 and Q2, there is going to be impact on our NIM by 5 to 7 basis points. But we are expecting that 2 moves which have been made now. One is that 100 basis point cut in the CRR. I think 15,000 crore amount is going to be released in a phased manner from September to November. And definitely that is going to add to my interest income, because whatever is there in the CRR, we are not going to any income out of that. So we will be able to lend this 15,000 crore and we will be able to generate some income. That is the one part. Second part is that we are going to reduce the deposit rate also, keeping the inflation in mind and the repo rate coming down. I think we are going to take the view on our entire deposit rate, including the saving deposit rate. So that also impact we can see from the Q3, Q4 onwards. More so, I think Q4 onwards, definitely there will be a credible improvement in our NIM will happen. All those impact will happen from the Q3, Q4 onwards.
Well, then just a 2-part question on that one. One, because you will get increased money from the CRR that will come by to you, the reduction in CRR. Would you up your loan growth guidance this year, because you will have more funds to earn interest on? And the second part is the savings rate cut. We recently saw the State Bank of India cut savings rate to 2.5%, which is the lowest that we've ever seen. With you cutting it further and the street, looking at other alternatives to invest their money, could there be a risk to your deposit growth as well? Because at 2.5-3%, people will find it very unattractive to put money in the banks.
First point is the credit growth. I think already we have given the guidance that around 11 to 12% credit growth will happen, and we are hoping that definitely further improvement will happen with our credit growth, because a lot of MSME and agri outreach activity bank has initiated, and I'm seeing a lot of traction that is going to happen. I think those results you can see in the Q1 quarter itself. I think that growth, MSME, retail and agri, I am expecting that there will be a good growth in that particular activity. As far as the corporate book is concerned, I think last time also I had mentioned that we have 1,35,000 crore of sanctioned of the last year plus this financial year. That sanction is already there with us, and I'm expecting, and already the movement has started, that the disbursement will happen in this quarter and the Q2, Q3 quarters. So we have a good pool of corporate book also, and I'm very confident that with all those initiative bank has taken and the outreach activity bank is doing it, I think we will have a very reasonable and good growth in the credit system now. And with all those moves RBI has made, I think definitely the credit offtake will improve. No doubt about it. Now, as far as the deposit part is concerned, we have a good, the liquidity is there in the system, and we don't see any challenge in deposit mobilization. Definitely, I think we are looking into the deposit rate cut, including the saving rate cut. Our ALCO is going to meet on the 30th of this month, and then considering all those factors, the scenarios of the repo cut and the inflation, I think we are going to take the view, and then we will announce what are the percentage of cut that is going to happen in the system. But definitely there will be some cut in the deposit, including the saving deposit.
All right. Hi, Mr. Chandra. Good morning and good to see you, Ben. Could you tell us with regard to your loan book, how much of it is linked to EBLR and how much of it is linked to MCLR? If you could give us that breakdown. And incremental loans, what are they going to be given on? MCLR?
Yeah, we have around 44% linked with RLLR, that is the EBLR. And around 50% is linked with the MCLR, remaining is with the base rate and the fixed rate. So repo rate cut, definitely that has got the direct impact on our 44% loan book. And that's the reason I'm mentioning that around 5 to 7 basis point, keeping everything constant, I think 5 to 7 basis point NIM will shrink. But with the deposit rate cut and the other activities which we are doing it, I think we will be able to mop up our the income. And definitely, I am very confident that overall operating profit and net profit, we will hold on to the level which we have shown in the Q3 quarter.
Okay, all right. So if you could give us what on an average for the year, in the near term, you're seeing 5 to 7 basis points, downtick on NIMs. But on an average for FY26, how do you see the NIMs pan out? Point number one.
I think, the guidance which we have given in the beginning of this financial year, that is the 2.8 to 2.9, I think we are definitely going to hold on this level now.
All right. Your ROA, you want to push it to around above that 1%, guided band.
Yeah.
What are the levels you have in store? Yeah, please go ahead.
We have given the guidance of 1%, and I'm very confident that this guidance we will be able to hold on. Because there are two initiatives which the bank has taken. One is that the recovery, the activity which we have sped up. I think if you see our recovery in the Q4, there was a TW or technical right of recovery itself was around 1,800 crore, and overall recovery was 4,500 crore. And this financial year also, we have given a guidance of 16,000 crore of total recovery and 6,000 crore of technical right of recovery. And we are on track on that in this quarter also. So that is one thing which is going to add to our operating profit and net profit. Second, we have built up a very, very strong treasury book. And I think that is also going to help us in maintaining our operating profit and net profit in this downturn scenario of the NIM also. I think we will be able to hold on to our operating profit and net profit with these two initiatives which the bank has taken.
All right. And final question, Mr. Chandra, before we leave you, the stake that you have in Canara HSBC Life Insurance, they've filed for IPO papers. By when do you expect, the IPO to happen? And how much money do you expect to mop up through this offer for sale?
It is likely to happen in Q3. That is the way it is happening now, as of now. And we are very hopeful that at the end of Q3, definitely this process will be on now, and we will be able to see some result out of that. The quantum, I will not be able to quantify it today. I think just wait on some time, and then we will be able to tell how much we are able to realize. But definitely,
you hold about 23% stake in this, right?
Yeah, 13% we are going to dilute, and our holding will be around 10% after the dilution.
Okay.
Right, Mr. Chandra, just a couple of more questions before we wind down, sir. Which segment for you is going to do the best? Is it, and I want specific comments on gold portfolio as well, because there also we've seen significant relaxations by the RBI. Could you give us a sense, first, which of the segments to your mind will grow the fastest, and then a bit of gold. What is the portfolio? How do you see growth there?
Two segments we are pushing very hard, and I'm very confident that will grow at a very faster speed. One is the MSME segment because of our digital initiative. Up to 25 lakh digital onboarding is there. No document is required. Anybody can apply it through the digital channel, through going to our website. And within 5 to 10 minutes, we are going to give the sanction to our existing customer. And to the new to bank customer also, it just requires 24 hours to give the sanction. So this is one activity we are going to push it in a very hard in the entire country. And for that, lot of initiative, outreach activity where our entire head office team is visiting in the field and getting the proposals. So that is one activity. Second one, another important activity is the self-help. that portfolio we want to grow up in a very, very big way. And I'm expecting that in this financial year, around 40 to 50% growth should happen in the self-help group and the farm mechanization loans. So these are the two very top priority activity which we have assigned for ourselves, and we are going to drive it in a very, very big way.
And gold, sir?
Gold, see, geographically also we are not very strong. We all know that most of the gold loans are happening in the south states now, where our presence is not very strong. And gold loan book, if you see traditionally, we are growing at 11 to 12%. And we are going to grow at this speed only. 12 to 13% growth will be there in the gold portfolio.
All right. So fair enough. Got that. Just one last question, sir. And this is slightly off now the core banking function, but it's important. Yeah. We've been reporting on the insurance side, right? I mean, the government was not happy with the bank assurance channel being pushed in a very big way. But I think there has been a bit of a change of mind there, and what we understand is that the government has told, especially PSU banks, that along with your core banking function, insurance for all by 2047. That's government's goal, and banker channel is pretty important for that. Has that communication come through, sir? I mean, is there what's the status?
See, the direction was that let us restrict the mis-selling. We should not do the mis-selling of the bank assurance product. That was the concern of the government and the regulator also. And we are very much mindful of those concerns. And in our bank, we are very, very strict about the mis-selling of the insurance product. Those customers who are willing to buy our insurance product or any other bank assurance channel or bank assurance products, I think definitely bank is there to offer those products. We have a tie-up arrangement with various insurance companies. And anybody who is looking for any bank assurance product, we are there to sell those products. But absolutely, we are very, very tough on mis-selling. And I don't think any mis-selling is happening in PNB.
Okay, so it's only mis-selling. It's not a step up in overall push. I mean, you're saying it never really stopped in that sense. And the volume of policy sold, that push has been there and it will remain there.
Yeah, definitely. And concern was only mis-selling. And the direction was also how to stop the mis-selling. A lot of initiative which we have taken, like we are taking the mandate from the customer through the OTP, and unless and until customer agrees for that, our no branch is able to sell any insurance product to any customers.
All right, Mr. Chandra, extensive conversation, but thank you very much. Very useful. Appreciate you joining us here on CNBC-TV18. So that's banking, but I guess, guys, from banking to real estate, let's move on.
Yep, we will. In fact, we were talking about rates coming down, and does that impact the realty space itself or not is the big question.
Well, that's right. Well, the RBI's double rate cut bonanza, that's likely to have a positive sentiment on the sector itself. To understand how's the feedback on ground, we're joined by Pavitra Shankar, the Managing Director at Brigade Group. Hi, Pavitra. Good morning, and thanks a lot for joining in. Let's get straight to that. How's demand on the ground? The RBI governor, has given a bit of a booster shot, which should spur good times for you all. How are you reading it?
It's really great for sentiment. It's really great for our customers. It's very beneficial for them, for anyone who has recently purchased and started the booking journey or even looking at buying a home. It makes quite a big difference. More than 50% of our customers take home loans. So for them, it makes a pretty radical difference, especially as we've seen over the last few years, the average ticket size also increasing across customers. So they're definitely looking at financing their purchases as well. So this is a very welcome news from the RBI.
Okay, got that. So RBI has done its part and you believe demand is good on ground as well. What about the regulators? How are approvals coming around? The last time around we had chatted, you had mentioned that still approvals were taking some time. There were some problems in the Bangalore market. Are things better than the last time? And do you expect to get even better from here on?
We're always hopeful. One has to be in this business that things will keep.
Are there signs, Pavitra, on ground as of now? I mean, hope is not a data point, right? Give us a data point. Are they better than what it was the last time we spoke?
We have received approvals over the last quarter. That's why we were able to launch quite a bit and show good numbers last quarter. This quarter as well, while there are a few small delays on ground, I think now we have visibility and we're going ahead and applying for RERA across a number of projects. So it's not a market improvement, but it is slowly improving. A lot of the e-Khata issues are resolving in Bangalore. So, we do have to just see that there's nothing else unexpected that pops up. But the existing issues in e-Khata and so on are definitely resolving.
All right. Two-part question, Pavitra. Before the RBI policy cut that happened, you had given us a pre-sales guidance of 15%, at least 15% growth in FY26 over FY25. Now that the cut has happened, do you think you can do a little better than that? What's your outlook on this? And the second part is realizations. Now, with the mix shifting towards premium, mid-premium, going away from affordable, the realizations increased by 40%. Is that sustainable?
So a lot of the increase in realizations we've already seen happen in our portfolio. One, like to like as well, price has increased for the same kind of product. We've also changed the product mix, as you mentioned. So we've taken very substantial hikes in our average pricing across the portfolio, as you've seen, 47 to 50%. From here on out, I would not expect it to go on the same trend. One, because we've already launched a number of premium projects. In the coming year, we do have a mix of upper mid segment and premium projects. We may do a plotted project as well. So overall for the portfolio, I don't see it increasing dramatically the way we have seen over the last couple of years. So I would just say it's a moderate increase. And again, would depend quarter to quarter based on the kind of project launches that we're able to do for that specific quarter.
And what about pre-sales? You've been clocking about, 2,500 crores for the last couple of quarters. Where does that quarterly run rate go to in FY26? And when you say you're not expecting a dramatic increase in realizations, where does that number stand at by the end of this year? Last year was a little over 11,000 rupees per square feet.
Yeah, so I think an annual increase of about 10 to 15% is reasonable to expect, again, based on the kind of projects that we're launching and also adding plotted to the mix as well. So I think that's fairly reasonable, and that's also how we're looking at the market overall. When we're looking at underwriting new projects, we're not expecting pricing on ground that the end customer is willing to pay to really increase in the way that we've seen it in the past. In our portfolio as well, our focus on super premium is still maybe about 15% or so. It's still not a very large percentage of the overall portfolio, but it has moved from mid-segment to upper mid-segment. And now most of our projects launching are in that upper mid-segment category. So from pricing, I would say, 10 to 15% annually is what I would look at. In terms of sales, we don't really do guidance, but I think the rate at which we're clocking is reasonable to expect.
All right, Pavitra, if that realization needs to go up, I'll tell you there are a couple of lucrative markets, maybe the Mumbai market. Maybe, foray into Delhi. What's the plan? I think you've hinted in the past that Mumbai could be a market that you'll be looking to expand your presence. Any plans on that front, Mumbai or Delhi?
Not in the recent, not in the very near future. Definitely, we're aware that it's a great market, but we also have a certain focus on South Indian markets. We aim to have really deep presence in these three markets. We still have a ways to go in terms of Hyderabad, expanding our presence there. While in Chennai, we've increased the land bank as well as have a lot of visibility on upcoming launches. So we'd like to do the same, focus on the markets where we've already got a presence and establish ourselves in a deeper manner before we keep adding new markets to the mix.
And finally, what about leasing? Amounts to about 1,100 crore rupees annually for you as a revenue. Where do you see that going?
So the portfolio is about 9.5 million square feet. It's mostly fully leased up. So until we get new inventory into the portfolio overall, which should take another year and a half or so, the rental rates are basically going to increase at the normal revenues. So it's pretty much a fully leased portfolio, and I don't see that moving dramatically higher from here.
You're unlocking value in the hospitality business, so obviously you won't be able to speak about that. But any plans to unlock value in the leasing business as well via, say, REITs or any sort of, business restructuring in a way that you can benefit from the annuity that you get from leases?
We definitely have our eye on that in terms of how we should be structuring our business in terms of the most efficient manner. In the near future, we are not looking at it, but we also want the portfolio to reach a substantial size before we can really think about doing that at a portfolio level.
Would that substantial size entail, according to you?
I think we should be at least 1,500 to 2,000 crores before we can look at that.
And how long before that happens?
Would take at least 5 to 6 years. I mean, we're still in the process of acquiring. We've recently acquired a project in Whitefield, so we would need to ramp up the overall portfolio growth, construction in order to get there, and that's the plan that we are working on.
Okay, all right. Always a pleasure talking to you, Pavitra. Thanks a lot for joining in. You're sounding quite optimistic in terms of demand. Hopefully the approvals get better and, maybe some kind of price hikes as well will be pushed through. And we here in Mumbai will be waiting by to hear about your foray, though for the time being, the South market is your focused area. Appreciate it.
That's all we'll do right now. We'll just wait for the foray because the prices in Mumbai, no way buying new houses or renting them as well.
Well, that's right. We had Prestige, Mr. Razak yesterday, who was telling us about that Pali Hill project. It's a beautiful one, and selling at top dollar.
There's one close to my house as well. The average size of a flat out there costs over 40 crore rupees. So I can just watch from outside and maybe at best eat a bhel outside that thing out there. Maybe. What else can I say? But, be that as it may, a lot of stocks are buzzing around right now. And top of the pops is definitely IndusInd Bank, up around 5% as we speak. A big mover, and obviously has been a big mover on the way down. So some of those, moves are now unwinding, and the positioning perhaps taking place out there as well. In fact, we'll shortly be joined by Hormaz, who will tell us what's actually causing IndusInd Bank to move higher. Hormaz actually is with us. Hormaz, 5% higher on this stock.
Months and months of bad news, and finally an upgrade coming in for IndusInd Bank today. Nomura has upgraded the stock. He's upgraded it to a buy recommendation from its earlier rating of neutral. They've raised the target price to 1,050 now from 700 earlier. So that's a 50% bump up in the price target as well, coming from Nomura. And they're saying that these legacy issues that the bank has been grappling with over a period of time have now been addressed. And as a result of which, they're expecting their ROA, the return on asset, to improve to around 1% by FY27. And the fact that the management looking to find a new CEO addressing these issues, and the intent shown is making Nomura optimistic that they are starting FY26 on a clean slate, is what they said. And that in case RBI does approve the promoters' intent to hike stake in the lender, and that could allay some concerns as well, is what Nomura has stated in its note. And the current valuations as well of 0.9 times 1 year forward price to book is attractive as well, is inexpensive, is what Nomura has said in its note. So based on these factors, they've upgraded the stock to a buy, among the top gainers on the index today.
Right, take that point. Thanks a lot. An upgrade coming in on a beaten down stock, and the reaction is for all to see. Let's focus on the tire industry now. Raw material prices in particular. Rubber prices have seen a sharp fall in the first quarter. How does this rub off on the tire players? Are price hikes on the cards? Is the export business taking a hit due to global turmoil? Let's discuss all of this and more with Arnab Banerjee, who is the Managing Director and CEO at CEAT, joining in. Arnab, too many moving parts. On the one hand, we have rubber prices which are lower, but on the other, a large part of your raw material also is crude linked. Crude-related, spikes that we've seen, close to $77 on Brent crude right now, and there is a fair amount of global uncertainty as well. In light of that, what's the kind of outlook that you have in the very near term when it comes to margins and global demand?
Good morning for having me here. So you're right, the crude prices have tapered off from quarter four, but again, it is kind of inching up because of the uncertainties. Rubber prices in domestic have been rock steady. There have been no erosion of rubber price at all. It has been swinging between 197 to 200 rupees per kg. International prices have come down to about $1,650 per ton. So it's a mixed bag, and we carry inventory. So the impact of raw material prices in quarter one vis-a-vis quarter four will be marginal at best, slightly lower definitely. As we go along, if the global uncertainties, geopolitical uncertainties don't play out in an adverse manner, we can expect some tapering down in quarter two as well.
All right. Hi, Mr. Banerjee. Good morning and good to see you. And I recall you said that the benefits of lower input costs will start trickling in from quarter two. But with the world in an uncertain place, do you still believe that we'll see margin improvement from quarter two onwards, the gross margins, EBITDA margins? And also, give us some clarity. The government has recently imposed a 5-year anti-dumping duty on imports of insoluble sulfur that's coming in from China as well as Japan. Does that have an impact on your business? And were you importing from both these two countries?
Insoluble sulfur is a small portion of the entire cost structure. So, yes, it will have an adverse impact, but not really significant. But as I mentioned, and I'd like to repeat that there'll be a slow taper off of the raw material situation because of inventories, and the trend keeps getting upset by new developments, as you have seen. Now, freight rates may also move up because of this uncertainty, and the crude has inched up. So if these things normalize, we still hold the view that the raw material should be very, very gradually taper off in Q2.
Okay, all right.
And what about demand? Because, domestic business, you were hopeful of double-digit growth. Has that happened so far in the first quarter? Exports, because of the uncertainty geopolitically, are they taking a hit? What's your target for the next couple of quarters and the entire year?
Yeah, I have been mentioning that for the entire year, we still look forward to a double-digit growth, as I've been mentioning at the beginning of this year. Last year, we had a double-digit growth as well. It's a mixed bag, the demand. Let me first handle exports. As I have been saying that given our situation or market share in various markets in exports, moment we get a better access to a market, we keep growing. So for us, the tariff, of course, has to play out, and we need to know what happens to the tariff, but we are not seriously disadvantaged with other exporters. So we expect US growth to come back in Q2 or maybe in Q3. US doesn't impact significantly at this moment because the contribution to our overall turnover is very, very low. Europe is very big for us, and we expect to grow in Europe. Latin America, Middle East, these are big markets for us. We expect to grow. So it will be a mixed bag, a little bit up and down. So quarter-wise, we cannot say, but for the full year, we're looking at good growth in exports. Domestic market, I think if you see the OEMs, it's again a mixed bag. The growth is slowing down in two-wheelers. There's no growth in passenger, and there's no growth in commercial vehicle segment as well. But as the new models come off the assembly lines of the OEMs, we have visibility of new fitments that CEAT will be getting. So we expect to grow in OEM vis-a-vis last year as far as this year is concerned, starting from Q1 itself. Replacement demand, again, passenger is muted. Hardly any growth in passenger vehicle segment, four-wheelers. Two-wheeler growth, which is led by rural and small-town urban, is doing fine. Scooter is doing better than motorcycle. And GDP growth, as long as it is 6-7%, we are fine on the truck segment as well. So I would say replacement is looking reasonably good.
Okay. Mr. Banerjee, good morning. Prashant here.
Right.
So basically, you've told us many times, right? So exports and consumer, these are the two areas where which are attractive and only better profitability segments as well. Exports, you've already spoken about. Consumer, I think. Overall, I mean, it seems it's a bit of a muddle through over the next 12 months or so. Would you agree? I mean, I was looking at data which just came out. I think it was about a month ago it came out. But after our last conversation, the sales of luxury cars, for example, fell for the first time in 20 years in 2024. We all know what's happening as far as EVs are concerned. So a bit of a muddle through. Is that the right way to look at it?
OEM situation, the data is there up to May, so in public domain. So there's no growth overall, and you're right, the top-end car sales also have tapered off. But we are dependent more on replacement. So the replacement volume is also stuck close to zero. So that is of more concern. However, here, because of 8-9 cornered fight, there is a market share play that will play out over the next 12 months. And we are very much, our strategies and tactics are in place to gain in specific geographies, in specific shares in replacement. And in OEM, our share will increase because of new vehicles coming out with CEAT fitment, which has got nothing to do with the overall growth of the market.
Okay, I've got that. So maintaining double-digit growth for the year, and we'll have to sort of course, watch the overall tariff situation, etc. Closely, freight costs perhaps a little higher, especially for imported raw materials. Thanks very much, Mr. Banerjee. Appreciate you joining in, and good speaking with you as always here on CNBC. Let's just look at the market for a quick bit. Up 50 points, 60 points. Mitesh is back with us with what he'd want you to do as far as specific trades go. Mitesh, what do you have?
Morning, Prashant. I think, the IT names are still buzzing, and that's where I think, some kind of movement can happen. So while the broader markets have been quiet, they've recovered, but they've been more quiet. I think focus on names like Cyient. I think the breakout happens about 1350 today. I think we got a high of around 1342, 43. So buy about 1350 here. Keep a stop at about 1325. Look for targets in excess of 1410 to about 1420. And the other stock which I have is sell on Steel Authority. That's a stock which is slightly turning negative. Keep a stop just about levels of 130 here. Look for target of around 121.
All right, take that point, Mitesh. Thank you so much for that. Meanwhile, don't lose sight of the market. 24,900 on the Nifty, doing extremely well. The Nifty Bank up around 1/3%. NBFCs are actually spiking right now as we speak. We have Bajaj Finance, which has moved higher. From the broader markets, we have AU Small Finance Bank, which has moved higher, along with Chola Investments and IDFC First Bank as well. So NBFCs and financials doing well. Take a short break. On the other side, Manisha Gupta joins in. Focus on the commodity space. Stay with us.
Welcome back. Let's just take a look at what's happening as far as commodities are concerned now. Markets, of course, are doing just fine. Manisha is standing by with, I suspect oil. Manisha, what else?
Well, yes, that continues to make headlines on every single day until that Iran-Israel conversation, rather not conversation, that war is on, that conflict is on. We will be looking at crude oil prices making those big swings on either side. Well, to begin with, we've seen 4.5% of gains in the overnight markets. It's trading firm even right now in Asia. In the last 1 week, we've seen the crude oil prices gain up by 10%, and it is 20% up now in the last 1 month. It also is gained up by nearly 4% when you talk about 2025 till time. Well, it all has to do with the Israel and Iran conflict, which has entered the day 6, especially with the kind of statements that we are hearing from the US president calling for unconditional surrender of Iran. The Trump also has said that Iran's supreme power is an easy target as of now, and any attempt by Iran to block Strait of Hormuz could send the crude oil prices soaring, or US coming quite heavily on them. This is the main contention right now, because we do understand that at this point in time, there are no oil facilities that have been impacted, and no exports also have been impacted. So the crude oil prices currently are looking at a cap into the international markets. Interestingly, the IEA report also has moved the markets. The organization says that the global oil supply is projected up by 1.8 million barrels to 104.9 million barrels per day for the year 2025. The global oil demand is expected to peak in by 2029 to 105.6. So when we look at the demand, it's slightly higher than what we are looking at in sense of production, but these numbers are for 2029. Interestingly, IEA also says that the global production capacity also is expected to increase by 5 million barrels to 114.7 by 2030. Now look at both these numbers. So we're looking at oil consumption peaking by 2029 at around 105, and the supply is going to be increasing, and that exactly is what the markets are looking like right now. So even as the global consumption will peak in 2029, the Chinese consumption is expected to peak slightly early in 2027 itself. That is because of the EV sales are surging, and they're moving towards natural gas rather than crude oil. So the numbers really tell you that there's not a very strong run-up in the crude oil price as anticipated in the years to come. Not just China, the other major economy like US as well, the EV is expected to account for 20% of their total car sales by 2030. Earlier, remember, that number was much higher at 55% on a year-on-year basis as well. The markets are looking at way more developments that are going to come through. The reason that you haven't seen the crude prices add more premium in these current prices is because, as I said, Israel or Iran, we haven't seen any oil infrastructure impacted right now. And then OPEC and allies also are raising their output. The markets also are looking at higher inventories globally. It is record high production coming in from US as well. So it is the supply side that is keeping the markets capped at this point in time. Going forward, well, it is going to be about the US Fed decision today. While they are going to keep the interest rate steady is what the markets are working with, but it also is going to be about guidance amid tariffs and what is going to be the policy going forward. That is something that the street will keep an eye on. Apart from that, it also is about the US housing data, weekly jobless claims. All of that comes in today, and that will give you further direction.
Manisha, thanks very much for that. So, important contextual information with what's moving right now. Let's talk about the other big story, I think, which, of course, is going to be closely watched. U.S. President meeting with the Pakistani Army Chief later today. Prime Minister Narendra Modi spoke with U.S. President Donald Trump. Here is India's Foreign Secretary Vikram Misri briefing on the talks which were held.
प्रधानमंत्री मोदी ने राष्ट्रपति ट्रंप को स्पष्ट रूप से कहा कि 22 अप्रैल के बाद भारत ने आतंकवाद के खिलाफ कार्रवाई करने का अपना दृढ़ संकल्प पूरी दुनिया को बता दिया था। प्रधानमंत्री मोदी ने कहा कि 6-7 मई की रात को भारत ने पाकिस्तान और पाकिस्तान ऑक्यूपाइड कश्मीर में सिर्फ आतंकी ठिकानों को ही निशाना बनाया था। भारत के एक्शन बहुत ही मेजर्ड, प्रिसाइस और नॉन एस्केलेटरी थे। साथ ही भारत ने यह भी स्पष्ट कर दिया था कि पाकिस्तान की गोली का जवाब भारत गोले से देगा। प्रधानमंत्री मोदी ने राष्ट्रपति ट्रंप को स्पष्ट रूप से कहा कि इस पूरे घटनाक्रम के दौरान कभी भी किसी भी स्तर पर भारत अमेरिका ट्रेड डील या अमेरिका द्वारा भारत और पाकिस्तान के बीच मध्यस्थता जैसे विषयों पर बात नहीं हुई थी। सैन्य कार्रवाई रोकने की बात सीधे भारत और पाकिस्तान के बीच दोनों सेनाओं की एग्जिस्टिंग चैनल्स के माध्यम से हुई थी और पाकिस्तान के ही आग्रह पर हुई थी। प्रधानमंत्री मोदी ने जोर देकर कहा कि भारत ने न तो कभी मध्यस्थता स्वीकार की थी, न करता है और न ही कभी करेगा।